when AI stocks got hammered recently, here's the AI related trades that made me $11,039.10 in 3 days following the Trade Canary member alert. Hi, I'm Sean Casey, and I'm part of the Trade Canary team. And in this video, I want to show you a lot of exciting things. You're going to see the exact trades and get the reasoning, good and bad, for each decision I made this week. You'll get an understanding of why waiting for a high probability trade setup and then taking action can be so profitable. You'll hear about the risk versus reward of these trades, and there's both, of course. And you'll see how these trades made a good profit despite me not buying at the lowest price or selling at the highest price. And you'll see I missed in both cases. In fact, you'll probably think I missed out on much bigger profits that could have been made. And if you think so, and you've got ways you would have traded this better or did trade it better, let me know in the comments how you would have improved on these results. How did this all happen? Well, it started on Monday, January 27th. I'm recording this on Friday, January 31st right now, when DeepSeek, a Chinese AI company, announced that it built its AI software model super cheap and easy compared to other AI companies. And the stock market went crazy and stocks fell out of the sky. And there was huge, almost crashes, right? NVIDIA stock dropped 17% on Monday, wiped out $600 billion in market value in a single day, which is the absolute record. I'm not even sure what the second worst day for a stock ever in history was, but that's a lot of money lost. And when this happened, what was causing it was basically that the Chinese company claimed, and I use claimed very specifically, that they had built this model so much more inexpensively and easily than U.S. companies were building things, which meant that A, the AI models the U.S. are using were way overpriced and they're spending too much money, and B, maybe the equipment manufacturers didn't need to be getting as much money as they were for all the equipment that was necessary. So Monday, there's a lot of bad news. There's carnage. And we notified our Trade Canary members, first of all, don't panic, because panicking is never the right answer, right? Just like FOMO, fear of missing out, and diving in is never the right answer, right? But don't panic, because things are most likely not all that bad, as people often overreact to surprises. That's an absolutely true thing in the stock market. And we also suggested our members should consider investing in some of the hard-hit tech stocks, because tech overall just got hammered. But we suggested you should look at your favorite tech stocks, ones you've thought about buying, ones that you're in now, and think about adding them. They're still good companies. They should see price growth in the long run. And in particular, in my opinion, the hardware manufacturers for the tech industry and for AI. Look, it doesn't matter if AI is easier or cheaper to build. There's still no end to how much everybody wants to build it. So you're still going to need memory chips and all that kind of stuff, right? And Nathan Rothschild, who is a member of the Rothschild family that you've heard about, the very rich financiers and bankers, said the time to buy is when there is blood on the streets. And Warren Buffett has quoted this statement quite often, right? So when everybody is losing their head, now's the time to take a good look at basically, what's on sale at a discount. And we had a specific suggestion in that Trade Canary update for our members that said, take a look at the call options on the QQQ, which is an ETF, an exchange-traded fund that mirrors the NASDAQ 100, because that had gotten hammered, as we'll see in a minute, on Monday. And if cooler heads prevail, which we thought they would, the market's likely to bounce back fairly quickly, because with everything have been pushed up so high, the market was, reacting, and people were pulling out and jumping. And then, once the first guy jumps and runs scared, so do a whole bunch of other people, right? But they're, as it turns out, not necessarily a huge reason to panic. By Thursday, right? So this Monday is a news announcement. Thursday, yesterday, you can see already there's headlines like on CNBC that DeepSeek's AI claims have shaken the world, but not everybody is convinced. In fact, there's a lot of scrutiny that's come out, and people have said, made claims that they've actually stolen technology from other AI companies and all kinds of stuff. I have no idea what's actually true. And none of that actually matters, because we're not interested in proving or disproving or whatever anybody's theory is. We're interested in how we profit from this situation. And if you look at this and you step back, especially now that it's a few days later, but if you go back and read about this, and think about what happened when DeepSeek makes this announcement. If you knew that DeepSeek was going to make this announcement, like you were a large investor in DeepSeek and you said, hey, they're going to make this announcement, what would you have done before that announcement was made? I'm guessing you would have shorted or bought put options on all the AI and tech related stocks, right? I mean, Nvidia fell 17%. At that point, if you'd been short Nvidia, you could have made a lot of money very, very quickly, right? So, was this a ploy by the investors in DeepSeek to go get themselves a bunch of money or get out of short positions that they were stuck in because they had shorted other AI companies? Who knows? There's a lot of speculation, a lot of conspiracy theories. I don't absolutely have any idea what the right answer is, but I do know that the panic was overblown, in my opinion, and the stock market reacted in the end the way that we said it would and said the panic was overblown. So how did I trade this and what did I do? And, based upon what we Trade Canary had told our members to do, there's three options that you had for how to take advantage of this situation, right? Right now we have this teed up in basically an opportunity that's in front of us that we have to act quickly to take advantage of, right? So we have three choices: buy stock in the beat up companies, or number two, we could have bought call options, right? So options basically saying that we believe the stock's going to go to a higher price, so we're going to leverage that. And the call options are lower risk because the only money we risk is whatever we put in the option. Or we could have bought both, which in the end is what I did in some cases. Now, before we dig in further, please, if you need to pause this video to watch this disclaimer, go ahead and do that. But understand, this is not personal financial advice for you. This is educational and informational purposes only. So let's look at the trades. All right, we told our members, look at the QQQ call options. And so that's exactly what I did. You can see here that on a Monday that I bought the call options, this QQQ that expired Friday, which is today, January 31st, at the 520 strike price. So these are very short-term options. Now, I bought the short-term options, which is riskier because there's not a lot of time for things to move your way, but you're going to get more movement if you have a shorter expiration date. And I expected the movement to come back fairly quickly. And you could see, that in the end I paid $292, bought 10 of them and sold 10 of them for $415. And if you had a smaller budget, smaller risk that you want to take, you could have just bought one even for $292, right? Because they trade in contracts of 100. In the end, I bought Monday, sold Tuesday, and I made 41.5% on my money, $1,216.63 net profits. I'll talk in a minute about why I sold so quickly, but let's take a look at what the chart actually looked like. So you can see that even before the open in the gray area that, this ETF was way down. And you can actually see down here in the RSI that it was actually way oversold. I mean, this thing, bottoming out down here, right? At the bottom of the possible range of being oversold. Now, I didn't buy at the low. You could see the low for QQQ was 502, bounced up, bounced around and everything else. By the time, sometime on Monday, later in the day when I bought the calls, this is about where I bought them. It's not exact. And where I sold them here, this is not exact either. But it was sometime earlier on Tuesday because you can see that I got the increase in value. And then you can also see that, this has continued to rise throughout the week. And this is, up through Thursday's close is what these charts are. So this doesn't include Friday. Now, considerations that I had this week on how quickly I needed to get in or out of trades. One of the things you want to do, especially if you're going to trade very short-term options, is to consider what's going on in the market as a whole, right? There's lots of stuff going on this week. There was the DeepSeek announcement that caused the market to come down, especially basically on the tech side, right? But then you had a lot of stuff going on this week. Later in the week, we have big company tech earnings like Apple, Intel, and Meta that were releasing earnings. Any of those could move the market up or down by themselves, right? Wednesday, the Federal Reserve was going to release their latest update on whether or not they were going to lower interest rates or possibly even raise interest rates and what their future thinking is. that moves the market. That can move it 1, 2, 3%, right? Friday morning was coming the inflation update. And if the inflation update came in bad, then the market might come down. If it comes in really low, the market might go up. So you can see there's a lot of factors that could move the entire market. And because of that, I was looking for very short-term trades, and I wanted to be safe because the first rule of investing is not to lose your money, right? So where do I come out on the continuum of this? Well, you can see that, I bought Monday, I sold Tuesday, right? So I bought at 292. The lowest traded price I could find for this option, the 520 Friday expiration, was 225. So, I bought at 292. You're never going to buy at the bottom. You're just not. I mean, unless it's completely random luck, and you can't look to do that. And I got out quickly. If I stuck it out this morning, this actually traded up to 1050. So there was, potentially even buying, around $3, I could have made, a 2x return, right? I could have turned $3 into $9 this morning, but that would have required me holding it. And I wanted to be cautious. I got a quick 40% return, right? And then the stock, the ETF price for QQQ started to come back down. And I said, hey, let's take some money off the table, because by then I also had other options that I'll show you in a minute in some other actual AI related plays. And I only wanted so much exposure, and this allowed me to make a very quick profit and put it in my pocket, take money off the table, not wait till Wednesday when the Fed was announcing, not wait for more earnings announcements that might move the market. And so, I took the very quick profit in, and there's never anything wrong with that, right? I mean, how many of you are completely happy you made $1,200 in a day on less than a $3,000 investment, right? Does it suck? But this is how I made the decision that I made, and why I made it. And obviously, that worked. Now, Micron Technology, MU, is another company that got beat up, and it makes computer memory and computer data storage. So in my opinion, even if you're saying AIs, models can be made more inexpensively, it doesn't matter, because they're just going to make more of them, right? And they're still going to use computer memory and computer chips and computer data. So, I'm not really, all that worried about it. This was a longer term play. And again, I considered holding this longer than what I actually did. But, in the end, I simply, got into it. This is actually a Tuesday buy. Let's go to the chart here. Well, actually, first, one of the things that I did before I got into this specific stock was, things are moving fast. And what I wanted to be able to do was know, am I crazy? Thinking that just because this got beat down, it's going to come back fairly quickly. And so one of the things I did is I went into Trade Canary, into our software, and we have built in an AI news sentiment feature. So we collect all the news stories about every company, and in them, our AI actually analyzes the story. Is it negative? Is it positive? Bearish, bullish, or neutral? And how much does it actually apply to our specific stock? And then we sum up all that. Now you could go down and I could read all the different stories, but I don't want to take that much time, but I could have. But instead, what I really want to look at is what's the overall news sentiment that the financial news markets are talking about. And you can see, red is bearish. So there is something here, but it must not have really much applied for it to come out and be zero. But overall, it's either neutral or bullish, and heavily bullish on the stock. So that allows me to look at something very quickly and say, okay, I haven't missed all the bad news or anything about this stock. The fact that it's beat down allows me to go into this looking for a very quick return and be fairly confident. And you can see here this stock not long ago, just a few days back, was on $106.38. Okay, then it gets beat down on Monday, and then on Tuesday, you could see it bounced, and then came back down. And so, I bought calls, and then I, sold them on Thursday. The low here was 87.76. You could see this thing came down like 15 some percent or a little bit higher, right? And, I sold out, then the stock continued higher. So I didn't get, the absolute top on this, but you can see that in the numbers. This is something I bought on Tuesday, right? I paid $2.12, lowest price This week was $1.97. So I actually got pretty close there. That was good. Just random. Not looking to be perfect. And then 2 days later, stock comes up. 286 is when I sold. That made me $1,090 on a risk of 31.89, so 34% in 2 days. It's a good return. Highest price was 333, so this one, reasonably close to selling out at a good number. And I could have held on longer, of course. I've got another 3 weeks before this expires. But again, I went into this with a very specific plan, and I suggest when you go into a trade, you go in with a specific plan, because what I wanted to do was get in, get the money, and get out. And that's exactly what I did. And so I was out of this and successfully traded it and made 34%. Again, could have stayed longer. That stock in 2 weeks, maybe that stock instead of goes way above 95 and goes back above 100. I don't have any idea. But I don't have to take that risk. I can take the profit, and I'm happy to take the profit. Now, ASML is a holding company. They develop and produce advanced semiconductor systems. These are the things that make data centers run and things like AI run. So, again, thinking about, what the opportunity is. The other interesting thing about ASML at this point is that, well, and many of these tech companies, is that when DeepSeek decided to make their announcement, many of these companies are in the pre-earnings period. There's a 14-day quiet period when they can't talk about anything to do with their company or in their earnings or anything else. So anybody could say anything bad about them, they can't respond. And DeepSeek picked a good time to make a big announcement that nobody could respond to, that was a direct competitor at the time, because they're public companies. They can't talk about this when they're about to release their earnings until they have their earnings. And ASML actually released their earnings on Wednesday and got a chance to talk about how DeepSeek and their claims might affect them. Our Trade Canary team, we do monthly picks for our members, and we absolutely love this stock. We've recommended it to our members as a good long-term investment. This drop back was a great time to buy more for a long-term holding. And so I did that. The stock this morning, I think, is about 750. So you can see, it's up, 7-8% already. And again, good long-term hold that we really like. And, I'm happy to have added, that into my portfolio and have the additional investment. Now, the call options, this is kind of interesting. And I'm going to explain this, but you could see I got in and out of some of them very quickly because, again, there was earnings risk because of the Wednesday earnings report, which would be the 29th. There was also the fact that you had the Federal Reserve reporting on Wednesday. You have other tech companies reporting on Wednesday. Who knows where this crazy market is going to go? I'm going to come back and explain my decision-making there in a second. But again, I looked at the new sentiment report. You can see while there's some bearish and a little bit neutral, overwhelmingly bullish, right? 616, the neutral and bearish only adds up to like 78% or 77%. So again, very bearish, bullish. The financial news markets love ASML, and I think with good reason. And the fact that it came back so quickly is more proof of that. And if you look at the chart, you can see that, this was at $766.87. Then it comes just bombing down. Again, you could see how oversold this is, right? Bottoming out down here. And then even as it comes back, the low was 650. I was nowhere near that. That was, pre-market. And, it came up, it bounced back. I bought the call somewhere in here, sold the calls that I got out of quickly, and then sold the other call here for the Friday expiration days. I also have some February 21st expiration calls that I'll show you. So these are the calls that expire January 31st today. So these were very, very short term. I was also working on buying February 21st calls to give myself more time because I really was fairly confident this was going to come back. But the 700 calls that I bought with the Friday expiration were very, very short term. And when I bought in to these three for the $5,400 at $18, at that time, I couldn't get in at the price I wanted to get on the February 21st call. So I bought three of these, and the market went up a little bit, or ASML went up a little bit, came down a little bit below this. Then I got into the other calls. And so, before earnings came out, before the open on Thursday, I wanted to lighten some of my exposure. And I just sold these literally to cover my costs. So I basically broke even on these two calls, right? As I paid 18, got $18.05 back for them. After the market came back, the earnings came back. I sold the remaining one for $39. So the one I held, I doubled my money on, but overall I made 39% and manage risk, because you always want to manage risk in your trades. If you do that, that's going to give you a much better opportunity to not let things get haywire. I didn't want to have too much riding and leveraged on this trade. If I had stayed in, clearly I would have made a lot more money, right? I mean, I would have been able to sell the 3 of these for $39, and that would have, more than doubled my money. You can also see if I'd stayed in longer, right up through the day of expiration, right? This morning, this traded as high as $52. You can also see the lowest price that somebody bought these calls was $12.30. So there was a much bigger swing available in here that, again, I didn't get all that swing, but still made 39% in a couple of days. Good profit, happy to have done that. My biggest profit position in terms of actual cash and return was in the February 21st options. Same strike price, the 700 strike price. These, as I said, I was able to get into later when the price came back a little bit more. I got in these for $25.40. You can see the lowest price somebody got in was this $20.90. And I held them, and the stock was, going up, gyrating, moving all around. I really wanted to double my money. I was trying to get to $50.80 or $50.90 to cover my commissions. But it wouldn't quite get there for me when I was ready to get out on Thursday. And because, again, I could have stayed in longer, and you could see Friday morning it's already at $60, and they've got 3 weeks to go. These could be at $100 by the time it's done. Who knows, right? They could also be back to 25. I don't know. But I had almost doubled my money, so I got out and, took my, $22 in option profit, made $6,600, 86% in 3 days, right? So, very, very good results. And was able to, collectively make over $11,000 from these trades. I'm out of these trades, so that's $11,000 that I've actually managed to bank by taking action when an opportunity presented itself. And I hope our Trade Canary members did follow along, because with the resources that they have and that you guys have got, from the alert to being able to quickly analyze and look at the stocks, to be able to look at the news sentiment, right? You can make some very quick decisions when this opportunity arises. Now, in your opinion, did I leave a lot of profits on the table? What do you think? Yes or no? My answer, yes. Yes, I did. Am I worried about that? Am I upset about that? Am I going to lose sleep about leaving profits on the table? Nope, absolutely not, right? I traded in what was a chaotic week. There was a lot of stuff going on, earnings reports, inflation report, Federal Reserve report. Markets could have gone either way, but I took action. There was fairly low risk because I was in the options. The only thing I risked in those options was the amount I put in, and I could have sold out if it went against me and not risked all the money that I put in. But I'm curious, again, hey, how would you have improved on these trades? Whatever you would have done to trade them better, or ideas you have for yourself, post your ideas in the comments. If you traded, let me know what your results were. I'd love to know how people are doing in these situations as we give you these setups. And I want you to realize, if you didn't trade this, that you need to be paying attention to several things. Number one is, that you need to be ready when opportunities arise, right? We want to wait till there's a good opportunity, and then we want to jump on that, right? So you need to think through the scenario of how you would act before it's time, so that when it's time to go, you're ready to go. You know your risk tolerance, you know what you're willing to do, you know what money you would put in. So key takeaway number one for me from this was I made a total profit of $11,039 from Monday through Thursday. I didn't buy at the top. or bottom, I didn't sell at the top, right? So in case you're one of those people that's like, well, somebody paid less and somebody sold for more, and there's no reason to make that trade. Look, a perfect is the enemy of the good. You're not going to make the perfect trade. I did not trade this perfectly by any stretch of the imagination, but my total risk was $19,140. That which means my return on risk was 57% in 3 days from Monday through Thursday, right? So I was in, I was out, took my money off the table. That's respectable in my opinion. I'm sure some of you are saying, man, you should have doubled your money. And maybe I should have. And hopefully you did. Okay. But still, you can make money without being perfect. You just gotta actually take action. Second takeaway, I started to talk about this a minute ago, is when you see an opportunity that tilts the odds in your favor, it's more important that you take action than try to make the perfect trades. I could have kept waiting because you could go look and see, hey, somebody paid, less money for the options than what it was right now. If I kept waiting for it to get all the way back to that low number, which in probably no cases did it actually get there, I never would have bought. And then if I held on until it went higher, where do you make the decision to sell? At some point you need to sell, especially when you've got a profit, right? Especially the QQQs. I could have easily held them longer. But I'm going into tech earnings season. Who knows what the market's going to react to that, right? But meanwhile, I made whatever I made. I don't remember the exact number, $1,000 or $1,200 in a day. Is there any shame in taking that money and putting it in the bank? Absolutely not, right? How many of you would be happy if you just made $1,000 between today and tomorrow? Sure, me too. Love it. Absolutely love it, right? Key takeaway number 3. If you're in a short-term trade, it is generally better to take your profit sooner than trying to sell at the high. For the options that I bought that were very short-term expiration, there's a lot of risk in that, right? There's not a lot of time to recover if the trade goes against you. So you want to get out sooner and take your profits. You're looking for a quick, sharp movement because you don't have much time value in those options, because it's only 3 days or 4 days till expiration when I bought those, right? So you don't want to be in them long. You really, hopefully you're not in them Friday hoping that it's going to go your way, right? Or then you've got to roll them, then you got to do something else to try to offset that. The longer term ones, the February 21st ones, could have stayed longer, right? But, in the biggest position that I had, which was ASML, I almost doubled my money in 3 days. Am I better off waiting another week or two to see if I could do better? Maybe. Could I have sold 2, kept 1? Could have done that as well. But I decided to take the money and put it in my pocket because it was a successful week, and it's a great way to wrap up on a Thursday and have an $11,000 profit, right? Right? That's a good feeling. I want to thank you for watching. Down below you can see more info about Trade Canary if you want to check it out if you're not a member. Thank you all of you who are members and watching this, and I hope to hear your feedback, and hope if you like this video we can make more like this, and share with you exactly what we're doing, how we're trading, how we're thinking, what we're doing to help you become a more successful investor and a more successful trader. And for our members, we will see you on our next monthly live training call. Thank you.